How about that? 2 videos in a row, no sunglasses. What's going on? Is this channel changing? Shooting from a parking garage? I think you guys can probably see why I'm shooting from a parking garage. It is pouring elephants out here. It's been like this all day long. Lots of rain. No chance to do the video completely outside, unfortunately. So I'm gonna walk around the parking garage just like we did during the tropical storm. Now, we all know how insane everything is with the housing market, and apparently this is affecting everyone and their life decisions to the point of even how they're getting divorced now. And no, this is not a joke. I saw a great story today talking about how couples are changing the way they're getting divorced, delaying getting divorced, changing up their living situation, all kinds of things like this due to the housing prices being so ridiculous, and most importantly, not being able to refinance properly. Most of the time, have a married couple wants to get a divorce. Okay, the wife keeps the house, and we're going to refinance and get the husband's name off the loan, right? It's just going to be under the wife's name from now on. Well, now people are not doing this, guys, in order to keep these low 3% interest rates, because you have people that got these low rates and are now getting divorced, and the way to keep the rate is have both spouses stay on the loan regardless of the situation, okay? So there's that. This one woman, she's now renting out spare rooms on Airbnb and living that way while keeping the husband on the mortgage because it's just too expensive to refinance, and that's how she's bringing in the extra money to help pay for the house, is rent out the spare rooms now that it's just down to one income. So basically, if you can't tell so far, the big bottleneck here for people who want to get a divorce in this environment is high interest rates. It's pretty much disrupting the way people would normally get divorced and have one person take over the property. People are even doing things like taking turns living in the house because they have kids, and it's just too costly to refinance, and obviously they have kids to feed and take care of as well, so that's never cheap. And so they're saying, no, I'll live here half the week, you live here the other half of the week. And if you think all this sounds crazy, guys, just check the story. I have the story on this below. It is kind of crazy, but it's what's really happening because people just cannot afford to even get divorced right now, as crazy as that sounds. And here's the other thing. Some people would say, okay, why don't you just sell the house instead? Well, I think you already know where I'm going to go with that one, but a lot of people are not in the position to do that for a lot of the reasons that we talked about in the past. The first thing is a lot of these recent home buyers don't have any equity, guys. So if you don't have any equity, you can't sell without coming to the table with money. So that's one of the biggest issues with people who are looking at selling right now, because it's like, how can you sell if you don't have the money? So you have these people that bought the house, probably put down maybe 5-10% max. Most people don't put down more than that. And now they're like, well, we're getting a divorce, the market's on the downslide, and we haven't really built up any equity yet because we haven't owned the house long enough. And on top of that, when you have the market declining, you're losing equity now, and selling is basically not an option. So as crazy as it sounds, it might actually make more sense for people like this to keep their loan and stay, in the marriage, so to speak, on paper, just to not have to refinance under these conditions, which is pretty insane when you think about it. And at the same time, it's not really that surprising. So really, the only other option in very rare cases, and I don't even know how they determine this or not, is a mortgage assumption. But the thing is, if you have a loan that's backed by Fannie Mae or Freddie Mac, which probably 90% of you do, then that loan's not eligible for assumption. You cannot assume that loan, but apparently under some circumstances, like a divorce, you might be able to if the spouse assuming the loan meets certain criteria. Now here's an example of how something like this might actually work out in real life. So you have this real life couple that's getting a divorce, the husband's staying in the house, the wife moved out, and he wants to keep the house there so that way the kids can continue going to the same schools, okay? They have a less than 3% mortgage rate, so obviously that's very good. And the ex-wife is agreeing to stay on the mortgage of the property even though she doesn't live there anymore, which obviously is a risk for both parties for numerous different reasons. But basically, how this will play out in the end is whenever this guy sells the house, he'll have to repay his ex-wife's portion of the equity plus appreciation. So at some point down the road, he's going to have to owe her some money whenever he sells this house, which I don't know if this is in writing or how this actually works, if this is part of their divorce agreement, I don't know. But as if relationships aren't already complicated enough, then you got to go down this road. I mean, it is crazy to think that people have to go through these amount of hoops and loops right now just to keep a house because of the low interest rate. It's just insane, guys. Now, I'm not saying that we should go back to having 3% interest rates. That would be detrimental to the housing market and cause everything to just explode beyond belief. So we don't want that. But it just goes to show you how reliant this whole economy and really the housing market in general has been on these extremely low interest rates. And now that that's going away, people are really trying to figure out what they're going to do now. Now here's something to think about for a minute. A lot of people who like to say that, oh, you're just fear-mongering, you're trying to scare people when it comes to the housing market or the economy. Well, how about this, guys? Here's the most recent email from Fairway Mortgage Company, and we've been covering the updates that they've been sending to me. How about this for fear-mongering in the total opposite direction? Here's what they have to say. Tip of the week, realtors, you've got to share this article with the fence sitters. When fence sitters are people that don't know whether they should buy or not. They're just kind of like waiting it out to see what happens, right? So this is meant to drum up business and pretty much convince people that it's time to buy a house. Did you know that in a few months after small monthly price decreases, in February, home prices increased? This goes against all of the worries buyers have about buying and losing value, and it shuts down all of the talk about how we will have to wait to buy when prices come down further. This is what we have been saying for a long time. As long as inventory remains low, there are still buyers keeping values in check. Now, I will agree with the very last part of this story that if inventory remains low, that it is going to remain competitive. And we know that inventory is not low everywhere, just like we know the housing market's not crashing everywhere. In some areas it's remaining very strong, and those are the areas that do have low inventory. And you know who's supporting that low inventory, guys? You are, the buyer. If you're going to go out there and buy a home under these circumstances and there's low inventory, you know who's keeping the inventory low? You, okay? That's just a reality check, and that's just the way it is. Because if you just gave up for a little bit and you weren't so desperate to get out there and get a house right now, then inventory would have a chance to go up. But when you have people that are still completely desperate to get out there and buy a home no matter what, then inventory is going to remain low. And obviously, there's an affordability aspect to this. There's a desirability aspect to this, depending on the market that we're talking about. If inventory remains low, then prices stay pretty strong. That is a fact. But here's the thing that I'm telling you. If you don't think this is fear-mongering, then what is? Because they're trying to scare people with stories like this that you better get out there and buy right now while you can, or maybe you'll never be able to, which is FOMO, guys, the fear of missing out. Stories like this play on that fear of missing out, okay? And there really is no real fear of missing out, because if you're patient and you have money and you have good credit, you're gonna be able to buy something when the right deal comes along. But some people just cannot wait. They see stuff like this, it just puts a fire underneath them, and they go out there and they'll buy whatever they have to, okay? Look at that. No signs of letting up. It is just pouring, guys. And I'm in South Beach, so it's going to be interesting to see what's going to happen with the roads and the flooding down here. I'm going to do some grocery shopping after this, so if I see any crazy flooding, I'll be able to film that and put it in another video for you guys. And here's another example of this fear mongering, but from more of the real estate side of things. Now check out this email. And these are just things that people send me, guys. That's how I'm finding this stuff. I'm getting these things in my inbox from real estate agents and mortgage companies. And this is the things that they're telling their clients and their partners, okay? Attention renters in Florida. The rent is too damn high. Property owners are increasing monthly premiums by as much as $1,000 a month. You can be a homeowner today. Stop renting. It's easier than you think. Do you have documented taxable income for 2 years, 580 credit score? We at Florida Mortgage Solutions Group created a solution for you and your family to make your homeownership possible. We solve problems and open doors for our clients, and we have a plan for success in making homeownership possible for your family. A down payment is less than first, last, and security, meaning for the rent. And when you purchase a home, no payments for 45 or 60 days before your first mortgage payment. Now, let's digest everything we just heard. 580 credit score, that's terrible, guys. I know buildings here in Miami, like these condos around here, they won't even let you in unless you have like a minimum 675 or 700 credit score. And yeah, they can require that. So sometimes that's a requirement. So you can't even move into certain places without that minimum credit score, but you can buy a house with the 580. Sound familiar? Ring a bell? 2008? Yeah. Now how about this other part? Talking about how the rent can go up by $1,000 a month. Well, I just shared with you guys what was happening the other day, okay, about my place. I'm getting an increase of $1,500 a month, and I own it. I'm not renting. That's attributed to higher property taxes, special assessments, and higher HOA dues, okay? So that can happen to owners too. That's a lie, it's a flat out lie to say that it cannot happen to you if you own your own place. Now you might argue, well, if you buy your own house, then you don't have to worry about HOA dues at least going up like that. Maybe not, but you're gonna be subject to property tax increases for sure, and you're gonna have all the repair costs that don't come along with a condo. So to say you're going to be saving boohoo bucks by doing that instead is also not true. What else do we notice here? They're telling people, well, the down payment's going to be lower than first, last, and security. All right, well, the average rental here is like what, 2,500 bucks a month now for maybe a one bedroom, right? So security deposit on something like that would be 7,500, first, last, and security, 3 months rent. But even if you say it's $5,000 a month in rent, let's put it at that, which most people can't afford, by the way, that's 15 grand, guys. I mean, what kind of house here in Miami, especially, can you buy with a $15,000 down payment? I don't know of anything that you can buy with that, okay? Even if you use FHA, you're gonna be cutting it close, which is probably what they're referring to here. And what are the other thing they're saying? Oh, you don't have to pay for the first 45 or 60 days. Wonderful. So you can get used to not making a mortgage payment while you get settled into your new house. I mean, does anybody else see what's wrong with this picture right now? That they're telling people that could barely qualify to even rent something to actually jump in and buy something if they have the down payment and they don't have to pay for the first 45 to 60 days. So obviously they're looking for the bottom of the barrel customers, and I'm sorry to say that, guys, but it's true. People that are well qualified to actually buy a home don't need to use programs like this. That's the reality. And I should know, I've worked with hundreds of clients over the years, and well qualified people don't need this. They have really good credit, they have a lot of money saved for a down payment, and they also don't have to worry about paying the mortgage within the first 45 to 60 days. So there's that. So there's a lot of reasons why this is targeted at people that probably shouldn't be buying right now and should remain renters, okay? Yeah. Hey.
Are you at the office?
No, I'm not.
I'm sorry, I'm going to have to ask you to leave this private property when you're out to the office. I'm so sorry for that.
I'm parked here. I'm parked right downstairs.
Yeah, but we don't allow filming on the garage parking. I'm sorry about that.
Why not?
It's part of...
I'm almost done. Give me 5 minutes, man. I'm almost done. I'm going to leave anyways, I promise. Smile for the camera, guys.
Thank you.
All right, so we're going to have to resume this in a little bit. Let's see where this takes us. This wasn't part of the video either, by the way, guys. This wasn't planned. You're going to validate my parking? Because I'm paying for this. I'm a paying customer here. Wow, man. Never been kicked out of a parking garage before. That's a first. They say you can't film here, and that's part of their policy, their rules. But obviously, it's pouring rain outside, guys, so I don't know. What else can I do? Hopefully Miami is not going to turn into the woke state, because that sounds crazy. All right, back outside. Hopefully we're gonna be able to finish this thing up before it starts pouring again. You guys seen all this flooding around here. It is just ridiculous today. Now here's something that I learned today that I didn't know. During the 2008 financial crisis, Ben Bernanke was the Fed chairman, and what they did is they paid the banks to park all this money with the Federal Reserve, okay? And the reason they did that was to limit this inflationary spike like we're seeing happening right now, okay? But this came with some consequences, because this whole situation, this setup didn't come free, guys. The Fed has to pay $275 billion a year towards interest payments in order to hang on to this money, okay? Because it's basically the bank's money that the Fed is hanging on to. And so what this does is it causes big trouble for the Fed, and they're in a situation where, what do? Do we get rid of this money now? And if you want to know how much money this is costing, it's costing the Fed about $750 million in interest every day that they pay to banks, hedge funds, and other large financial institutions. And to put things into perspective of how much these interest rates have rocked the boat for them, a year ago that interest payment was $18 million a day, okay? Now it's $750 million a day. So you think you got it bad with the bills? Imagine having that payment on your hands. And why is this a problem for us now? Because this $750 million a day is basically being pumped into the economy now in the form of these interest payments, and it's going to help increase inflation. Now, this puts the Fed obviously in an extremely tricky position, because supposedly their goal is to tame inflation, which I'm not entirely convinced anymore that it really is the goal. But we're going to see pretty soon, because now that they have this other dilemma to deal with now, their true colors are going to be showing very soon, guys. So basically, the Fed is in big trouble, because if they stop paying the interest on these reserves and they just let all the money back into the economy, it will be roughly equal to about $5.7 trillion in liquidity, which is basically, dollar bills, money supply added into the market overnight. So that's 25% of the total money supply, which would cause a huge inflationary spike, similarly to what we saw back in the 1970s. So this is obviously not good, and it's not what we want to see happen. And that's why the Fed has so much power. They are basically in the driver's seat here with our economy, guys. They control the money supply, and that basically controls everything. It controls the cost of everything. It controls how much people are willing and able to pay for things, and that alone says it all. And their decisions are hanging in the balance right now on what they're going to do about all of this, and it's going to affect all of us. Now, you can call that fear-mongering or whatever you want, but to me, that's just reality. That's the real decisions that they are facing right now, and the truth is it will affect all of us. But some people get all hung up on that and think that, oh, you're just trying to scare everyone. No, I'm not, guys. This is the reality. The people that are telling you to FOMO into the real estate market because there's going to be no houses left, they're the ones FOMOing, okay? Even though they're still building houses like crazy in many areas, and there's no shortage of homes out there, guys. They're out there. And eventually the people that own them are going to sell them. It's that simple. And here's another example of more fear-mongering from the other side as well. There was another article today with an economist from Zillow warning how this is already the bottom of the housing market once again. And I know we've seen this before. First of all, they're using the same bullet point as the mortgage companies, saying the supply is still low, and as long as supply is low, prices will remain high. And like we said earlier, that will be true in some areas, but that's not going to be true everywhere, because we've already seen home prices come down dramatically in several markets, and many others are likely to follow as supply does catch up, because supply is not going to remain off the market forever, guys. It just doesn't work that way. I thought they had more arguments to this besides just the low supply argument. But it turns out that's basically it. That's all they have to say is supply is still low, and as long as that remains the case, prices will remain high. But we see that interest rates are starting to do their job because we're seeing how low the mortgage applications are. We're seeing how few people are out there buying homes compared to what it was a year or two ago. And we're also seeing the prices come down in many markets even with lower supply. So imagine if the interest rates are enough to drive the prices lower even without the supply going up. Imagine what's going to happen when supply does go up. That's what I keep thinking. Like, the high interest rates is already enough to turn most buyers off, mostly because they just can't afford it. It's not that people just don't want a house anymore, because we saw that people are willing to do crazy things to get a home, paying over asking price and all of this. But the thing is, people really can't afford homes at these prices, like we discussed the other day. To buy a median price home in this country right now, you need to make well over 6 figures a year, guys. And not many people or households make that. And that's just the median price. We're not even talking, what it costs in more favorable or desirable areas like Miami or LA or New York or Phoenix, like wherever, places that people really want to live, where people are moving to and there's jobs. Prices are way higher than that. For them to say that, supply is low and like it's going to remain like that forever, and that's going to be the only thing to prop up this housing market, that means the housing market's standing on one leg, guys, supply. Because that's all they got to say. That's their only argument. So what happens when we don't have low supply? That's what I want to know. And my guess is interest rates will still be quite high when we have more supply, which is probably going to make prices come down. But anything is possible. I will say that. I am not denying that the reverse can't happen. Can supply remain low for years to come? Oh, yeah, of course it can. Can the Fed start lowering interest rates again? Sure. I can't predict the future, and neither can anyone else. I'm just going by what we have with the information that we have right now and trying to figure out where that's going to take us all. If you guys enjoyed this video, make sure you click the bell notification down below. YouTube will alert you every time I post a new video, and if you don't want to wait, check out my next one on the screen right over here, and I'll see you in the next one.